Since inception of World Access, our global multi-manager offering, nearly 13 years ago, we have searched and continue to search for the world's finest investment managers. Our due diligence process will not conform to what you might read in the pages of textbooks, nor are we over-reliant on maths and stats to drive our process. Rather, it is our pursuit to uncover the smartest investment brains in the world, and then to decide in what economic environment to give their money. Peter Lynch, a great American investor, famously said, and I quote, "Behind every stock is a company. Find out what it is doing." And this is a perfect introduction to Suni's presentation, Tales from the Road. Ladies and gentlemen, please would you welcome Sunil Thakur.
We don't think that investment opportunity is driven by macroeconomics, geopolitics, or really even markets. Investment opportunity at its core, especially for growth investors, comes from change. There's always somebody somewhere coming up with a new idea, finding a new way to do something, improving on the status quo, and that leads to a new product, a new service, maybe even a whole new industry. So change is the root of opportunity for growth investors. Change at its core is a human characteristic. It's driven by ambition, it's driven by creativity, it's driven by a desire for hard work, it's driven by a desire to change the status quo. Because that's a human condition, it's also a constant condition as long as we're populating this place. And that means that investment ideas and investment opportunity is going to be a constant regardless of what the external environment is. In the US and in Europe, you're starting to see cable TV subscriptions level off and in some cases actually decline. But media consumption's not going away, it's just moving to a different format. People are getting it a different way. They're moving to streaming media. Well, that's great if you're in the business of selling streaming subscriptions like Netflix. Similarly, every other headline about China talks about slowing growth. Mathematically, that's true. The state-owned enterprises, the infrastructure businesses that have driven growth the last 30-plus years, they've run their course and are beginning to run out of steam, and that's bringing down the overall growth rate of the economy. Under the surface, what you have in China is the world's largest e-commerce market by far. The largest company that is driving the bulk of that growth, Alibaba, grew its revenue over 30% last year, and over the last 5 years has had revenue growth on an annualized basis north of 50%. If that's slow growth, I'll take that all day long. So the point is, there's opportunity whenever there's change. There's a lot of change in the world, and if you position yourself on the right side of change, then you ought to be able to do quite well. Just some context on what we look for in an investment. Change is the starting point that creates the opportunity. But we're always asking ourselves, how big can this company be? How much bigger can it be in the future? As growth investors, what we want to do are find businesses that we think can sustainably grow their earnings over time, and then as investors, we'll be rewarded from a rising stock price that comes to reflect the underlying earnings growth of that company. The next thing, though, you need is to look at companies, look for businesses that are doing something that is very difficult to copy. If you're successful at your business and you're making money, other people are going to try and steal your idea and copy it. So do something that's difficult that can't be replicated. Competitive advantage is probably the single most important means for sustaining leadership and sustaining the growth of a business over the long term. And lastly, we don't own that many companies. We have a portfolio of 38 businesses. There's probably an opportunity set of several thousand. By few, but by the very best. We believe strongly in owning only leaders. A disproportionate amount of the reward, by definition, in any industry is going to accrue to the leader. That business is also going to be best positioned to deal with the inevitable change and that comes along with being in any industry, and they'll be able to drive the future, more likely to drive the future in their industry rather than be driven by it. So we're going to spend the rest of our time walking through just a few examples from our portfolio, the kinds of businesses that you all are invested in today, try and bring the framework I just laid out a little bit to life and make it a bit more real. 90% of the payment volume, credit and debit card payment volume in the world is processed by two companies, Visa and MasterCard. And Visa processes 2/3 of that. It's twice the size of MasterCard. Again, own the leader. And the reason this is the industry structure, we think it's a very stable and sustainable industry structure, that's why Visa has been one of our largest positions for many, many years, is that you have a very complicated, fragmented, and decentralized global system. When you have this fragmented of a system, you often need a common standard to sit in the middle of that system. Still, only about 40% of global personal consumption expenditure runs on plastic. Our view is that over the long term, societies around the world are going to move to be primarily cashless. Let's talk about a healthcare company that is turning science fiction into reality. So some of you may have heard of personalized medicine, the idea of personalized medicine, and the emerging field of genomics. In 1990, the US government funded the Human Genome Project. It took 13 years and $2.7 billion to sequence or analyze one human genome, so one person's DNA. And by 2008, technological process had gotten that cost down to a mere $10 million. In comes a company called Illumina. And they have today brought the cost of sequencing a whole human genome down to about 1,000 US dollars. This is tremendously serious and will have a very big impact on not just the way drugs are discovered, but the way healthcare is administered. Today, virtually every pharmaceutical company uses genetic sequencing as part of their research and development process to help them more specifically target the drugs that they produce. And increasingly, this is becoming available in some more consumer applications. And our view is that owning a company that sits in the middle of that ecosystem and has developed the key enabling technologies is going to be a great way to profit and benefit as investors as this trend emerges. Now we're going to go to a completely different industry in a different geography. Now we've studied all over the world a number of different small format food retail models, and we continue to be impressed by the profitability of these businesses, the scalability of the businesses. But our favorite one of all, favorite example we found just because of its sheer dominance, is in Thailand. It's a little bit different than the grocery model. It's more of a convenience model. It's a company called CP All. They're the master franchisee for 7-Eleven in Thailand. And one of the best pieces of advice I ever got in terms of being a research analyst is that being a good research analyst is often about being a good method actor. So put yourself, especially when you're researching consumer companies, put yourself in the shoes of the consumer and try and view the product or good or service from the perspective of the user. If you've been to Thailand, you know street food is a very popular commodity. All of the street food vendors would set their stalls up right outside the 7-Eleven. That's because they knew that that's where the foot traffic was. That's when it really hit us between the eyes, the importance the 7-Eleven played and the role that it played in different regions in Thailand. In many cases, we would joke that 7-Eleven is people's refrigerator. You can see it in the numbers. The convenience store industry in Thailand is not really growing. CP All continues to grow. It is almost twice the size of the rest of its competitors combined. To this day, they're still adding about 500 stores annually. Together, these things make it almost impractical, in our view, for another competitor to come along and compete in a way to try and replicate their geographic footprint across the country. So that, to us, is a very well-entrenched competitive advantage that's going to be difficult for someone else to displace. So we're going to finish up with another emerging market example. We're going to head west to India. It would be an understatement to say that we love India. It's about half of our emerging market weight. We own several companies there. It's also one of the highest growth economies in the world. It's also probably the economy undergoing the most positive structural change of any large economy in the world. So it's a great backdrop, in our view, for a place to invest. Now, if you've been to India, you also know the traffic is a complete mess. For that reason, two-wheelers, motorcycles or scooters, are often the best way to get around the country. And for that reason, it's the biggest two-wheeler market in the world. Almost 20 million units are sold annually. So it sounds like a relatively attractive backdrop to invest in the two-wheeler industry. There's one problem. It's a highly competitive industry. The answer is you do something completely different, and you don't sell a motorcycle. What you do is you sell a lifestyle and a brand. Some of you who are motorcycle buffs might be familiar with the old British motorcycle brand Royal Enfield. If you're not, this is the longest continuously produced motorcycle brand in the world. What you may not know is that for the past 35 years, it's been owned by an Indian company called Eicher Motors. About 10 years ago, they decided that they wanted to reinvigorate the brand, and their business model was essentially build a brand and an image around it. Because of the heritage and the legacy that it had, they thought they could do that and turn it into India's equivalent of Harley-Davidson. And I'm only half kidding when I say a great way to figure out if a brand is truly powerful is go assess people's willingness to tattoo that brand onto their body. People will tattoo Harley Davidson onto their body. People will tattoo Royal Enfield onto their body. There's not a lot of brands in the world that are like that. Every single one of these examples ultimately is the result of change. And change is the lifeblood of opportunity for a growth investor, and we think change is constant. As long as the human traits of ambition and creativity and a desire to make things better, as long as those things don't go away, then investment opportunities aren't going to go away.